Today, Bitcoin jumps back above $42,000 as the cryptocurrencies rally carries on. Robinhood reports a surge of crypto trading in November as investors look to get off the sidelines. And Vance Spencer of Framework Ventures outlines where VC crypto funding is flowing after steep declines in 2023. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin once again on the rise as investors push the cryptocurrency past the $44,000 mark for the first time since April of last year. By 1:45 Eastern, Ether's also moving higher, rising to $2,300, and XRP rising to 62 cents. Okay, let's talk about the top stories. Bitcoin investor Brian Kelly thinks the global macroeconomic environment is a boost to crypto prices. Investors are starting to bet that the Fed is done raising rates, and Kelly told CNBC's Fast Money what he thinks that means for investors.
I think it's a macro tailwind. We've been fighting the macro headwind for almost 2 years now, right? Rising rates, stronger dollar, all of that. The Fed's probably done. Europe has got a real problem on their hands. China's got a massive problem on their hands. And Japan is unlikely to tighten. So when I look at global liquidity, I think, yeah, short gold, Bitcoin, both of them are going to do well in this environment.
Now, Kelly told the Fast Money traders that he thinks we're close to a spot Bitcoin ETF being priced into the market and that prices could retreat shortly after a potential approval in early January. Next, the recent crypto rally has been a boon for Robinhood. The trading app told the SEC in a filing yesterday that November crypto trading volumes rose about 75% above the previous month. That surge in activity came even as stock and options trading volumes were mostly flat month to month. Now, the latest data marks a turnaround for Robinhood's crypto business after the platform reported a 55% drop in crypto trading volume in Q3 alone. Last, CFTC Commissioner Kristen Johnson says crypto firms should, quote, take a hint following the Binance settlement. She spoke at the Financial Times Crypto and Digital Assets Summit, where she expressed hope that the settlement and other recent crypto enforcement actions would serve as a template for how to operate. Now, Reuters is reporting that Johnson also said enforcement actions against industry players may have peaked following the $4.3 billion settlement with the world's largest crypto exchange. The commissioner also spoke last week at the annual Blockchain Association Policy Summit in Washington, D.C. At that event, she pointed to Binance and other recent enforcement actions, saying they, quote, created guardrails for the digital asset market in the absence of governmental action, specifically tailored to the crypto economy. All right, for our main story, let's turn to venture capital investment in crypto. The VC space lost significant momentum over the last few quarters, so I spoke with Framework Ventures co-founder Vance Spencer to learn why and whether he expects the downward trend to reverse course in the months to come. Recent reports show that venture capital funding for crypto startups remains challenging after a rocky year. Galaxy Digital Research revealed that the crypto and blockchain sector saw nearly $2 billion invested in the third quarter of this year, marking the lowest since the fourth quarter of 2020. That continued the downward trend that began after a peak of $12 billion in the first quarter of last year. Now, PitchBook released its Q3 crypto report last month, noting that VC interest in crypto waned in the quarter with a 28% drop in funding and a nearly 25% decrease in deal count, also the lowest level since late 2020. What do you think was behind the Q3 numbers? Is it perhaps because AI is putting a dent in crypto VC interest? Does that play a role?
I mean, certainly it's never been harder to raise a crypto fund, but in our opinion, it's never been a more favorable environment to deploy one. We raised $400 million about 2 weeks before Luna blew up last year. So right under the line. And, from distressed asset sales to, liquid purchases that were, down incredibly, but now are doing incredibly well, to venture deals that have had pricing resets. It's never really been a better time to be a crypto investor. And these things work in cycles, right? Like, you're not always going to have people on your team and everything's priced right and everything's going, according to the plan. But, the environment that we see today, it's rarely been this favorable. It reminds us of our first fund that we launched in 2018. And that was, a similar scenario. Nobody wanted to invest in crypto funds at the time, but it was just such a phenomenal vintage. And I think we expect the same for this year.
Do you think AI is playing a role at all in the downward trend?
I mean, for the most part in San Francisco, and I'm here in San Francisco, AI is kind of, come and gone. Obviously, it's a huge theme in the zeitgeist, but, you've had people spin up their wheels on, the zeitgeist and hyping it up. You've had people invest, and now you're kind of still waiting for these products to hit the market in a way that really impacts consumers and drives revenue for these tech companies. And you can see it in SaaS margins. These things haven't reaccelerated. And maybe that's because of AI, just needs a little bit more time. But, when everyone kind of goes one way, you should think about going the other and look at crypto prices. Like this industry is not dead. And if you're underwriting it that it goes to zero, you're going to be pretty wrong in about, I guess now.
So you touched on this, but would you say there are in fact signs of improvement on the horizon, especially with publicly traded tokens like Bitcoin and Ether moving higher recently, as you noted? And what sectors would benefit the most if there was a reversal of that downward trend we have seen so far this year?
We break it into three categories. The first category is the majors, right? ETH and Bitcoin. We've been on a journey for almost 11 years to institutionalize this asset class. The first ETF was filed by the Winklevi in 2013. And, obviously that didn't happen then. And every year we thought it was going to be that year. But, we've been on this journey to institutionalize the asset class. And those two assets are ready, ETH and Bitcoin. And so, they're going to be the first real assets to graduate from this space and get real institutional inflows. And I think that's incredibly bullish. In the middle of kind of the pack is DeFi. And these are protocols that borrowing, lending, trading, facilitating derivatives transactions, these things are highly levered to the recovery in asset prices in crypto. And it might surprise you, but a lot of these things are actually profitable and buying back their own tokens. And so those are kind of next up on the institutional docket. And then the third category that we think about is gaming. And gaming is the, how do you bring 100 million people into crypto, moonshot, and gaming people look, act, and feel like crypto people. They use digital assets. They participate in digital economies. And so all of these things, there's real work being done in them, and it's being delivered, this or next year. And so it's hard to kind of be bearish uniformly on crypto. I think you can nitpick certain things, but I honestly haven't heard a very good counter argument for why crypto, is not going to succeed.
Now, I want to point to a report out last month by CoinShares, which said that digital asset investment products saw inflows totaling $346 million for the week of Thanksgiving, the largest weekly inflows in more than 2 months straight. The report notes that the run, which was spurred by the anticipation of those spot Bitcoin ETFs in the U.S., is the largest since the bull run in late 2021. What does that signify? And do you think the potential for spot Bitcoin ETFs are in fact a major catalyst?
I mean, nothing to fix sentiment like price, right? When we were buying ETH at 1,000, a year ago, nobody wanted to talk to us. And it wasn't because, of the fund or anything. It was just because the sentiment in the industry was just so poor. And now at, 43,000 or whatever Bitcoin's at right now, we've got LPs coming to the office. They're asking how things are going. We got new people reaching out. And you don't really see that in traditional venture. Crypto has a weird way of healing itself because there's kind of this hybrid of private and public token diaspora. But, the things that are impactful are the real work that's being done behind the scenes. And I think that's what LPs are starting to come around to. While they say, it might be interesting if Bitcoin goes to 200 or 300K or ETH goes to, 5 or 10K. I think they're already looking to the future in terms of what are the real applications that are going to be built here. And the more you dig in there, just the more positive people tend to get. So I would say it's nice to see people come back.
What do you think is driving the higher prices right now? Is it the possibility of rate cuts in the U.S. or the potential for those applications for spot Bitcoin ETFs getting approved? And do you think the positive momentum will continue into 2024?
I think it will. I think people are excited about the prospect of institutionalization. And, this is a retail only market that has almost, $2 trillion of market cap. There's no institutions buying this unless they're signed up for Coinbase, which very few of them are. And so the idea that inflows of the institutional basis could come into this space and be hugely meaningful, people have done analysis on this. And some people say the low end is about 10 billion in the first year of inflows. Some people say the high end is 25 or 30 billion. And Bitcoin or ETH, it trades about, $2 or $3 or $4 billion a day in volume. And that might sound like a lot, but just from my lived experience of buying these coins in size on exchanges, buying 9 figures of various coins. And I think we're one of the only firms that really does this. You move the price when you do it. And we're not trying to, obviously we're just trying to get filled on these things that we're trying to buy. But if there's anywhere near 10 to $25 billion of inflows that come into this asset class from institutions, it's really hard to not see the impact of that. And so 2024, very, very bullish. 2025, same thing. But I think the long-term prognosis is that we're creating a new asset class, and that only happens once in 100 years. And I think people are excited about that potentially happening here.
So last month, Binance was hit by the U.S. government with a $4 billion settlement, which saw its founder and CEO, Changpeng Zhao, step down and plead guilty to charges of money laundering violations. What was your reaction to that settlement, and what do you think the impact is for crypto? Do you think that development could affect VC investment at all?
I think cleaning up the space is one of the things that we frankly needed to do over the past year, and crypto has this remarkable ability to clean itself up quite quickly. It's only been a year, but we've charged people, we've incarcerated them, we're shipping them off to jail, we're settling with the various exchanges that are still afoul of the law. And then you look at what are the biggest changes in market structure. The CME, the regulated CFTC regulated exchange based in Chicago, that's the largest open interest exchange in crypto right now. And it's ripping higher. Every single day, it adds more and more interest and open interest to it. And so, if you think about it, we really have cleaned up the space. And I don't think that's a negative. I think that's a positive. And so I think we're more looking forward than looking backwards at this point.
Now, Spencer also discusses how VC firms play a role in building crypto hubs around the globe. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.